Welcome to Halcyon Report CPA Review. I'm Edwin, and today we're going to be talking about the accounting concept of debits and credits. In regards to debits and credits, the most important thing to remember is which side the debits or the credits go. And to do that, simply think of the capital of the US, DC. Write it out, DC. Automatically you have your answer right there. D for debits on the left side, C for credits on the right side. And there you have it, a simple way to remember your debits and credits. Now, it's important to note that I mentioned in the previous video, debits and credit are an accounting concept that is used to create journal entries. Now, to better understand debits and credits, you must first be familiar with the term normal balance. Normal balance in accounting simply refers to which side of the debits and credits table increases the account in question. Let's take the cash account for example. A normal balance in the cash account is simply asking to determine which side, is it the debit or credit side that increases the cash account? The answer here is it's the debit side. This applies also to, let's say, an account on which you owe money to. Say, for example, the accounts payable account. The accounts payable account's normal balance to credit. Now remember, normal balance is only trying to figure out which side of the table increases the account in question. And in this case, accounts payable, it's a credit side. Now this is an easy way to know exactly what you're dealing with if you're new to the accounting field. The more experienced people here, maybe this might be a refresher. Now let's jump right into it. Let's look at how we apply debits and credits to our accounting equation. Now, assets are usually a benefit to the organization, and in accounting, a normal balance in an asset account is a debit. Now, liabilities. A normal balance in liabilities is a credit. Now, stockholders' equity. Pay attention carefully here. A normal balance in stockholders' equity is a credit, but stockholders' equity is broken down in two parts: common stock and retained earnings. Let's take a look at this example right here. On July 1st, Company A applies for a loan for $1,000 and receives $1,000 cash. Now, how would we record this accounting transaction? Or should I say, how do we journalize this accounting transaction? Now, I'm going to show you exactly how to write out a journal entry. When writing out a journal entry, there are actually 5 key important parts that you have to pay attention to: the date, the account in question, the debit and credit sections, and also a note describing exactly why you entered that journal entry. So these are the 5 components of a journal entry that you have to pay attention to whenever creating one. Now let's record the cash transaction that we had from the example. In the first row, we debit the cash account, and as you see, the $1,000 features directly under the debit column of this journal entry. Now the second portion is the notes payable account. As you notice here too, the $1,000 features under the credit section of this journal entry. And now in the final section of this journal entry, the note describing exactly why we created this journal entry. And there you have it. We know that Company A received $1,000 cash, and we know cash is an asset account. We also know that in order to increase an asset account, you have to debit that asset account. Now remember, the most crucial rule in regards to the accounting equation is that the asset side must equal the liabilities plus stockholders' equity side. So now that we've debited an asset account, we must in turn credit a liabilities account or a stockholders' equity account. And in this case, as the example states, we applied and received a bank loan for $1,000. So a loan is a liability. It's money that we have to pay back. The same would have been the case if we had bought a box of pens for $1,000. The only difference is that we would be crediting accounts payable for $1,000. Now this brings us to the end of this portion of our course, and I hope you found some clarity and better understanding in this video. Thank you very much for watching. This is Halcyon Report CPA Review. Take care.